Thank you very much for that warm welcome, and can I say thanks also to the organisers of this webinar for your kind invitation. I've really enjoyed hearing the comments already, and there are some more comments that, as you say, I would like to bring from the experience of the UK, and just tell you some of the things that we have done well, but also some of the things that we haven't done so well, and that hopefully you can learn from, so that you don't necessarily make the same mistakes that we have done. I began my work in open banking in 2016 when the UK government launched a report into increasing competition in retail banking. So that's the important thing, is that where we began was around increasing competition. My role, as you say, Rashid, is I'm the Ecosystem Development Director at the OBIE, the implementation entity. So this is the body that was set up as a result of that government investigation to fix the problems that it saw. And it created this body to implement open banking, which was, yes, off the back of PSD2 in Europe, but also went slightly further and made one or two additional requirements in the UK, which I'll touch upon in a moment. Since 2016, I've been very fortunate in that I've been able to travel, although obviously not in the last year, but up until 2020, and advised governments and regulators in countries including Canada and Mexico, Australia, New Zealand and Japan, although sadly not yet in the Middle East, although maybe that will be able to change soon. So what I'd like to do I just take 5 or 10 minutes. What I would like to do is just look, first of all, at the foundations for open banking. As Rashid said, go back to how we started. So how did we make this happen in the UK? Because many of the elements that we used in the UK have also been used in other countries around the world as they adopt their open banking implementations into their own cultures and into their own banking systems. Then I'll say a little bit about, well, where are we in the UK? So what's the situation right now? How are we moving towards mass adoption? And then finally, I'll just say a few words about what I think is coming next, some of the challenges that we have. And then later on in the panel discussion, I'd be delighted to take any questions that you may have. So first of all, let's go back to what is open banking, what's driving this new approach to banking. And I would like to give 3 foundational principles. Now, the first one may surprise you, and the first point I'd like to say is that this has nothing to do with banking. This is not a banking issue at all, in my humble opinion. I think this is all about the value of data, and it's about the data that we as individuals, as consumers in a society, value the most. And rather than talking about the UK, let me talk about Australia as my first example, because I think they got something correct from the very start. So their legislation is not called open banking legislation. Their legislation is called CDR, which stands for Consumer Data Right. And very simply, what the Australian government or the Australian regulator has attempted to say is that Australian citizens have got the right of access about data about them. And they're going to start making that data available to them, and start with banking data. But Scott Farrell, who is the author of the original report, the moment he'd finished working on the open banking part, began straight away working on open energy, on open utilities. And so what they're saying there is that Australian citizens have got this right of access about this data concerning them, starting with banking, but immediately looking to go out. The problem we have in the UK is that we became very narrow from the start. We said it's all about, not even about banking, we said it's about current accounts. So at the moment, we can't touch, certainly in my organization, we can't touch any savings data, we can't touch investments, pensions, and so on. It's very narrow focus. And we are struggling now with this concept of open finance, about how we broaden. So number one, it's about data, first of all. That's for me, the underlying piece. So my definition of open banking, one that I wrote about 4 years ago, and I still haven't needed to change it yet, my definition is this: that open banking is about customers of a bank who are choosing to give access to the transactional banking data, in our case from their current account, and give access to that data to organizations who are not their bank. Now, what that means in reality is that me, as a customer of a bank in the UK, I am choosing through open banking to give access to that data to a fintech, to a third party who will provide value back to me that, obviously by implication, the bank isn't already giving me, or else I would stick with them. So there's a bit of a lesson learned if you're a major bank here. Think about how you're serving your customers now, because if you don't, it will become very easy, as several of the speakers already have said, to switch and go elsewhere. So my first foundation is it's all about data. The second one has already been alluded to. I think Peter touched on this just a few moments ago, and that is that it's about a trust framework. So if the principle of open banking is that I as a consumer are going to share my banking data with a third party, then trust is right at the heart. Consent and trust are right at the heart of that. So we have built in the UK a trust framework. We call it the directory, the Open Banking Directory. And that trust framework is the mechanism by which I can be certain that when I am sharing data with an organization that I think is called HSBC, for example, that it really is HSBC, the global bank, not a fraudster who's pretending to be HSBC and just wanting access to my data. So that trust framework is really, really important. We can talk much more about that later. The third has also been touched on, and that is a regulatory framework around the use of the data and the use of that trust framework. Now, in Europe, as Rashid said in the intro, we had PSD2, the Second Payment Service Directive, which mandated that consumers have got access to that data and that banks should make it available. In the UK, we took that PSD2 regulation and we built it then into our open banking regulations to go further. Australia, as I say, have got its CDR framework. Mexico has got what's called its Fintech law. But in all cases, it's legislation that enshrines the rights of consumers to access that data and share it. Now, the fourth bit is something that we have done, but not all countries have done. And I would strongly recommend that if you're in a position of influence, that you consider this carefully and think about this. And in my opinion, that you should do what we did in the UK. And that is that you build not just a technical standard that tells people how the sharing of data works, but you do that in a common format. One of the strong benefits of the UK fintech scene, if you talk to any of the fintechs, as I do on a daily basis, is that by having a common standard, a fintech can build its product much more easily and much more quickly, because it knows that the standard for accessing data from Barclays Bank is the same as accessing data from Lloyds Bank, as from HSBC Bank, from the Royal Bank of Scotland, from Santander, in fact, from all of the banks that are mandated within open banking in the UK. That common API standard means that it is much more accessible, it's much more easy and quicker for fintechs to stand up their new propositions and make them happen. So those are my quick foundational points. Let me quickly tell you a little bit about where we've got to in the UK now, because much is written about the progress that we have made. We launched, it was written into law in January 2018. And we took the approach that 9 of our largest banks, in fact, it was the 9 banks who between them cover about 84 or 85% of all of the current accounts in the UK. They were mandated, so they were required by law to make that data open to any regulated and authorized third party using that common API standard that I described a moment ago. In the UK, we have the banks that share the data, and there were those 9 that we started off with. And then we have 2 types of third party who access that data. And without getting too bogged down in letters and acronyms and abbreviations, we have one that are called AIS, which is Account Information Service Providers, and the other are Payment Initiation. So by far the largest number are in the first category, the account information. And these are fintechs who are taking my data, with my consent, taking my bank data and providing it, doing things, transforming that data and giving it back to me in order to give me value. Now that would be good examples like just helping me understand how I'm spending my money, for example. Payment initiation, on the other hand, is a much higher threshold of security, but it's an increasingly valuable service. And that's where the third party is actually initiating payments on my behalf. And that's something that we're going to see much more of in the UK. I'll say a few words about that in a couple of moments. But back to where we are in the UK. So I mentioned at the start, we had those 9 banks, the so-called the CMA 9. that were regulated, mandated, that have by law to make that data available. But since those 9 banks at the start of the journey in January 2018, we've now got to the point where we have 762 entities or organizations in total who are in the UK's open banking ecosystem. Now, not all of those are live to market. Some of those are in our sandbox. But if I just think about the live to market for a second, that of that 700 and odd, there are 307 of them who are right now live to market, authorized and regulated. So they're authorized by the Financial Conduct Authority. They're sitting live in the open banking directory and are participating in sharing and receiving data from people like me, sharing my current account data. That 307, if you want to know the breakdown even further, that 307 organizations that are live to market now is made up of 83 banks. So we started with 9 who were mandated, but that's grown from 9 to 83 banks. And there are 224 third parties, fintechs, who are using that data, who are live now with consumer-facing propositions, helping consumers like me and small businesses to understand their data better. One of the things, the most important metric for me, when I sit with my boss, the trustee, and have to describe how I'm doing in my job, there is only one metric that really matters to me, and that's the number of consumers in the UK who have made a choice to consent to give their data, to access their data to a third party. So how many of these consumers are doing this? And if you've followed me or the Open Banking Implementation Entity on LinkedIn, you'll see that I got very excited a couple of weeks ago because we passed the 3 million consumers mark. So we have 3.1 million consumers and small businesses who've chosen to link their current accounts to open banking providers. For those of you who are more technically oriented and want to know about API calls, so the APIs, as I think some of the previous speakers were saying, the API calls are the foundation, the bedrock, if you like, of open banking. It is the means by which I, as a consumer, give access to a third party to use my data. Last month, February of 2021, there were about 710 million API calls made in that month. Those are just open banking API calls. You're quite right, one of the previous speakers, there are lots of banks use APIs for other things, but just in open banking in the UK, about 710 million API calls were made last month. So let me finish just by giving you a glance into the future and what I think are the challenges for us in the UK. And therefore, I think, because the UK is leading the way and Europe is leading the way, I think these are the things that you will see also in GCC and other areas across the Middle East, what I think is coming next for open banking. I'm certain that 2021 will be the year that open banking payments take off. Right now, it's possible to make a single immediate payment. So if I wanted to send some money to Peter Casey, because we had lunch together yesterday, for example, and he paid both of us, and I wanted to send him some money to pay my contribution for lunch, I can do that. I can make a single payment. I can make it immediately. I can do that now. The bit I can't do is if I want to pay my power company for my electricity or gas usage, or my telco for my mobile phone usage, because there I'm making a recurring payment every month, and that payment is different. It's a variable payment. That's not yet possible. So we're just finishing a consultation in the UK to make variable recurring payments possible through open banking. But payments through open banking are much faster than credit card payments, and also the fees involved are either zero or significantly less. So they're real benefits for merchants. The second thing that I think is going to happen this year is that you'll see additional APIs that are outside of the scope of open banking that will become more popular, more prevalent. So we call those either premium APIs or enhanced characteristics. So for example, there are certain websites, if you want to participate in the UK, where you need to prove that you're over 18 years old. Now, the banks and the open banking ecosystem has a lot of data that can say that I, David Beardmore, am over 18 and therefore able to participate in whatever that the activity is. And that was an example of a premium API. Another one would be just length of residence, to say that I've lived in this house for at least 5 years in order to be able to open an account for somewhere. That's a premium API. The third area that I think will happen this year is that you'll see open banking move into broader finance sectors. So I said one of the things that we've done badly, wrong in my opinion, in the UK, is that we focus very narrowly on current accounts, whereas I think now there is a strong push for us to move into open finance, to bring in savings and investment accounts, pensions and so on. So I think that will happen. And fourthly, I think you'll see open banking extend into other sectors outside of finance. So just in the last month or so, we've been involved in helping our energy regulator in something that we would call open energy. And we have further discussions around that. So those are what I think is coming next in the UK. But what I would say in conclusion in this part of my discussion is that I think you have to be under no doubt whatsoever that this shift in retail banking is here to stay. If you are tempted to bury your head in the sand, which is a very English phrase, but I hope that it translates to you. In other words, if you were to think that this is just going to pass you by, and if you ignore it, in a couple of years' time, it'll have gone and we'll be back to the old way of doing banking, I am absolutely certain that you are wrong and that you will be mistaken. So please pay attention to what is happening. Get involved in this. This shift that consumers have got access to data and feel empowered is a global trend, not just in banking, but across all aspects of our consumers' lives. And I cannot see that it will stop. So please pay attention to it, look for help if necessary. But I believe that this idea that these major international global banks that will continue to dominate, I think that idea will weaken. It's already weakening, and you'll see it to weaken further. Fintechs will prosper, that will become more important. And then, as I can't remember who, but one of the earlier speakers quite rightly said, the other thing that I think you have to just look very, very carefully for in all parts of the world are the global tech players. So the Tencents, the Amazons and Googles and Facebooks of the world, depending on which part of the world and society you're in. But these global tech players are already becoming massively important. And what you'll hear will be a common phrase when somebody will say, well, they don't have a banking license. They're not interested in becoming banks. They're interested in banking, but they're not interested in becoming banks. So watch out. If you think that your position as a historic traditional retail bank is unchallenged because these people just sell mail or goods that are delivered to our homes or help us on mobile phones or whatever, watch out, because they're coming for banking. That's part of their strategy. They don't want to challenge you in being a bank. They don't want the hassle of that, but they will challenge you in providing banking services.